Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing an illustration which is related to the full-fledged example of financial statements of not-for-profit organization. Now, when we're speaking about financial statements for not-for-profit organization, we'll be dealing with the complete receipts and payments account, and we'll be dealing with the balance sheet, that is the opening balance sheet and the closing balance sheet. That means 1st of April and 31st of March balance sheet is what we'll be looking after. So let's start with the illustration that has been mentioned down here. So following is the receipt and payment account for EXE Club as of 31st of March 2016. So the receipts have cash in hand. They have balance as per passbook which has been mentioned for certain items like donations or rather deposits account, then current account, then bank interest, then donations have been mentioned. Receipt from teas has been also mentioned. Contribution to fairs has been mentioned here. Sales of equipment is one portion where they have mentioned the items here. Now, there is a one portion which states that net proceeds from variety, the amount has been mentioned there. That is entertainment, it refers to 780 rupees. Donation from a forthcoming tournament refers to 1000 rupees. So the total of receipt side is 7820. Now let's figure out what do we have on the payment side. We have groundman's fees that we are paying up. We have moving machinery fees that we are paying up. We have rent of ground and cost of teas again. We have fares, the items that is related to the travels and etc. We have printings, we have repairs here. We have honorarium that is given for any special celebrity or any special person that comes in for any event. Now the balance, that is a closing balance as per passbook, has been also mentioned, because if you know, this receipt and payment account has opening balance of cash and passbook and closing balance of cash and passbook. So deposit account has been mentioned, current account has been mentioned, and cash in hand has been mentioned. Now there is certain additional information that has been also mentioned down there. The first information is honorarium is supposed to be increased to a total of 200. That means that much of balance should increase here. That means additional amount has to be mentioned there. Subscription due for April 2015 and March 2016 has been mentioned here. Outstanding amount due has been also mentioned, which refers to printing amount again for the 1st of April and 31st of March 2016. Now, the checks that were being presented for payment of repairs are still unpaid, or rather they haven't been gone to the bank for payments here, has been mentioned down. Value of the machine, this is the closing value of the machine that has been mentioned here. Now there are certain interests that we have already earned, however this hasn't been mentioned into the passbook. That means this is an unclaimed amount that is still here. And the last information refers to bonus to groundsmen. That means the groundsman fees, and addition to that certain bonus has been mentioned. This is only mentioned for the 31st of March 2016. Now based on this, we're supposed to prepare a receipts and payment account, and after that we're supposed to prepare the balance sheet opening and closing. So let's start with the income and expenditure procedure first. So we have mentioned the expenditures and income side. Let's put all the expenses down here on the expenditure side now. So the first expenses that we have mentioned here is the groundsman's fees, and the rent of ground has been mentioned because there is no adjustment in it. The next one will be the fares expense. To fares expense, that means there are certain expenses that we have already mentioned, and out of that the contribution of our own has to be subtracted. So we'll subtract the contribution. The next one that we have mentioned is the printing and the repairs expenses. All net amount has been mentioned down there. Now the next one will be the depreciation on the machinery. If you know, there was a depreciation reduction in the, or rather the reduction in the value of the machinery. That is because there is certain depreciation that has happened on it. So let's check out what exactly it is. So for depreciation of machinery, we have the opening balance which has been mentioned. Out of that we have mentioned the closing balance, or subtraction of closing balance has been done. So whatever balance we have, out of that the sale of moving assets has been done, and balance is been taken out as a depreciation amount. So the amount is 470 that we have mentioned. So to honorarium is the next expense that we have mentioned. We have added the additional 200 rupees that is supposed to be done because earlier balance was 400. So we added 200 into it and the net balance has been mentioned out as 600 rupees. So the last expense that we have mentioned here is the bonus to the groundsman, which is 300 rupees, which has been mentioned as a part of the adjustment. Now we have completed all the expenses side. Let's move on to the income side and record all the incomes. So on the credit side, the first income we have is donation and subscription. The net amount is 2550. So the next income here is the receipt from teas or fares basically. So the gross amount was 300, out of which the expenses were 250 as mentioned in the adjustment. Hence, the net amount that we have received here is 500 or rather 50 rupees. That has to be supposed to be mentioned on the next or the final column. So the last two income is the proceeds from variety that were mentioned in the adjustment as 780 rupees and the interest that was already given earlier in 30 rupees and the closing balance or rather the interest that we could have earned is 20 rupees. The total interest that we have earned is 50 that we have mentioned out. Now we're going to figure out the interim balance and see whether we have excess of income over expenditure or excess of expenditure over income. That means deficit or surplus basic. So the debit side interim balance is 3390. Let's figure out what do we have on the credit side. The credit side balance is 3430. That means it is clear that there is excess of income over expenditure. That comes to 40 rupees of surplus. So the total of income and expenditure comes to 3430. Now it's time to prepare the last phase of this sum, that is balance sheets. So this is the closing balance sheet that we are preparing. That means all the net items will be mentioned. So let's figure out the liability side first. So we've mentioned all the liability side. Let us explain what exactly we have mentioned here. The first part is the outstanding expense, which includes groundsman bonus. Then we have printing and honorarium there. After that, we have the bank overdraft. That means the opening balance was 260, closing was 150. That means 110 is still there, which is an overdraft here. Capital fund is the special fund, that is opening balance plus the surplus that we have will be added to the capital fund. And the tournament donation that was mentioned in the receipts and payments account comes under this category. Now let's figure out the asset side. So on the asset side, we have mentioned the cash balance and bank balance, the due amount towards subscription and the interest amount due, and the final value of machinery and equipment. With this, we have completed the balance sheet of 31st of March 2016. Let's tally that. Now, the balance sheet total comes to 5210. On the similar basis, we have to prepare the opening balance sheet as of 1st of April 2050. So let's mention the asset side first. So we have mentioned all the items of the asset. The balancing figure will be the capital fund and which will be equivalent to the balancing capital fund that we have mentioned there. So the asset side total comes to 3580, out of which liability side total 500 if subtracted gives you the exact capital fund, that is the balancing figure. So this is how the income statement and balance sheet has to be prepared for both opening and closing, especially when the income statement is supposed to be prepared. All the items which have adjustments, please select those items and keep them aside, and after that make the necessary changes of outstanding and prepaid on it. That means due will be added, paid will be subtracted, and accordingly you'll get the net amount which has to be mentioned here in the income statement. So I hope this example gave you a clarity about the basic details of income and expenditure account. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.